the thing that's been primarily impacting the U.S. stock markets and then consequently the rest of the world, particularly the emerging markets, is what's going to happen to short-term interest rates. And at Centerstone, we're long-term investors, we're value investors, so we tend to not incorporate the short-term moves and interest rates into what we do. But clearly, as a discounting mechanism, the stock market, is feeling somewhat vulnerable or has felt somewhat vulnerable this year. So we'll see if this next one is the last one, or if they're going to continue on their gradual approach.
Rick, what's driving yields and the dollar today? Issues at home or issues abroad?
I really think it's a combination of both, Wilf. I think with the major central bank meetings coming up, we have Thursday with the Bank of England and the ECB. 2 weeks from tomorrow, we begin our two-day meeting, which most likely results in a rate increase. As we go through the cycle and get close to the biggies, we always find the same dynamics in place. We see the short end of many of the markets moving higher in yield. If you look at the 2-year in Europe, minus 54 doesn't sound like a high yield, but it is the highest yield close for that 2-year European note since the 28th of February. Ours, of course, at 271 is another cycle high of more than a decade. And I do believe that we want to pay very close attention to the dollar. If you recall, Wilf, before the emerging market issues, whether you're talking May or predominantly in August of this year, the dollar index really wasn't highly correlated with what the Fed was doing. It was a bit on the spongy side. So it's going to be interesting this time around with some of those global issues a little hotter than they were to watch, in particular the pound, the euro, and the greenback.
And Hank, sticking with currency just for a moment, we've continued to see pain in terms of the emerging markets, their currencies. I think India, Russia, Indonesia, just to name a few, those currencies at fresh lows today. Are emerging markets a buying opportunity, or is this something to steer clear of as an investor?
Well, I think they're a buying opportunity if you're an investor. In other words, you're a long-term investor. You want to be buying things when they're down. And in terms of valuation, emerging markets are very attractive. That doesn't mean we're out of the woods. If you're a trader, maybe you stay away from that. But I think this is probably a fairly good entry point. I don't think you have the risk of an all-out contagion like you did back in the Asian crisis in the late 90s. I think this is more isolated, and the major economies of emerging markets are in pretty decent shape. South Korea, China, India, as an example.
Hank, you're bullish on some emerging markets. That's fairly bold. To what extent, and if you had to pick one of those markets, which one would it be?
Well, Wilford, we use emerging markets as an asset class, and we use ETF indexed, so we don't try and pick the winners and the losers. We're just gain exposure to the asset class. But of that asset class, the three I mentioned, India, China, and South Korea, make up about 50% of the index, and those economies are in good shape.
Abhay, do you agree? Where are you counseling investors to put their money right now?
Yeah, I mean, with the emerging markets, if you're 45 or older, you kind of know the extremes of what those markets can kind of do. So what we do is we don't put them all in one bucket. Nowadays, South Korea, you can argue is not really an emerging market anymore. You could argue that for many other markets. So we are individually finding securities here and there, which is interesting is that, many stocks are down 40 or 50% in dollar terms the last couple of months. And usually when we go overseas, or in emerging markets, we kind of, we might let go of some of our quality screens in order to capture the growth potential. But now we're getting some higher quality businesses that have the growth potential that I'm not having to overpay for or to pay for that growth. That's a change from beginning of this year. So there are some opportunities we found, but I'm not willing to say buy all emerging markets. I think that you do have to distinguish between them.